Good morning, dear students. Let's continue with the next problem on estimation of working capital. This problem is very much similar to the previous one that we have solved. We are taking this problem just to make you clear about the concept of working capital or estimation of working capital. The problem given is estimate working capital when amount locked up in inventory is raw material 5,000, finished goods 10,000. That means there are two types of inventories in this particular company. One is raw material, another is finished goods. And the amount that you have locked up, that you have kept in these inventories is 5,000 for raw materials and 10,000 for finished goods. Next detail given is credit sales. Debtors are allowed 2 months credit, rupees 60,000. The meaning of this is that the debtors are given 2 months credit period and the total sales is 60,000. Total credit sales is 60,000. Next, manufacturing expenses rupees 24,000, wages 36,000. So these are the expenses given, manufacturing expenses and wages. And what they've said is lag in payment of wages and manufacturing expenses is 1 month. Lag in payment means you're delaying the payment. That means these are outstanding. You have not paid it. So it becomes current assets or current liability? Yes, it is a current liability because you're delaying the payment. So it is outstanding expense. Outstanding expense is a current liability. So the third point about manufacturing expenses and wages is related to current liabilities. Then raw material consumed 24,000. Creditors allowed 3 months credit. Now creditors are allowing you 3 months credit. That means they are creditors. For what? For purchasing of raw material. So you have purchased raw materials worth 24,000 and the creditors are giving you a credit period of 3 months. That means it is current liability again, which is creditors. Okay. And then add 10% contingencies. So this is the problem given to us. From this problem, we have to estimate working capital. So let's go ahead with the solution. As we have already seen in the previous problem, working capital is calculated in two parts. First one is current assets. Second one is current liabilities. Okay, so we have to take the current assets first and the second part would be current liabilities. So let's go ahead to consider the current assets. Now which are the current assets given in the problem? First one is inventory. So if you see inventory, under that raw material is given and finished goods is given. Okay, so raw material directly 5,000 rupees because it's directly amount locked up given. Second is finished goods 10,000 which is directly been given to us. Then comes your debtors. Now what they have given about debtors? Debtors are allowed 2 months credit and total is 60,000. So how do we solve it? It is debtors 60,000 into 2 by 12. Now why 2 by 12? I'll explain it once again. Though I have explained it in the previous video, I'll just explain it once again to make you more clear on this concept. 60,000 is the total credit sales of the year. But we do not want the total credit sales. We just want it for 2 months because your debtors are allowing you 2 months credit. Debtors are allowed 2 months credit. So after 2 months, they're going to pay you back. So we are going to take only 2 months credit. So how do we solve it? For 12 months, it is 60,000. That is total is 60,000 for 12 months. Then for 2 months, it would be how much? If you solve this, it would be 60,000 into 2 divided by 12. And that is what we are considering over here. That is 60,000 into 2 divided by 12. I hope you're clear with this concept of converting total into the months which we require. So 60,000 into 2 by 12 gives us 10,000. So we are done with all the current assets, that is raw material, finished goods and debtors. There is no other current assets mentioned. So once we get all the current assets, we have to take a sum of current assets to get the gross working capital. So 5,000 plus 10,000 plus 10,000 gives you 25,000. So 25,000 becomes your gross working capital. Once you calculate the gross working capital, the next one is calculating current liabilities. Now under current liabilities, we have already discussed manufacturing expenses, wages and creditors, because manufacturing expenses and wages are delayed, the payments are delayed, and creditors are allowing you 3 months credits. So these three are your current liabilities. So first one is outstanding manufacturing expenses, total is 24,000 and it is 1 month credit. So it is 24,000 into 1 divided by 12. That is what we have considered over here. So 24,000 into 1 divided by 12 gives you 2,000. Similarly, we have to do the calculation for wages. So outstanding wages would be 36,000 is the total wages and they are outstanding for 1 month. So 1 divided by 12. So 36,000 into 1 divided by 12 is 3,000. Then we go for creditors. Total creditors are 24,000. The raw material purchase is 24,000. And the creditors are allowed 3 months credit. So the calculation goes like this: 24,000 into 3 divided by 12. So 24,000 into 3 divided by 12 gives you 6,000. Okay. So we have considered manufacturing expenses, we have considered wages, we have considered creditors. That means we are done with all the current liabilities. Now we know gross working capital minus the current liabilities gives us net working capital, right? So gross working capital is 25,000 minus 2,000 minus 3,000 minus 6,000, that is total is minus 11,000. So 25,000 minus 11,000 gives you 14,000. So 14,000 becomes your net working capital. That's not the end of the problem, because the fifth point they say add 10% contingencies. So to what we have to add 10% contingencies? We have to add 10% contingencies to the net working capital. So how much is your net working capital? Your net working capital is 14,000. 10% contingency, that is 14,000 into 10% gives you 1,400. So 14,000 plus 1,400 gives you 15,400. So what is this 15,400? That is your estimated working capital. So estimated working capital would be 14,400. Now I guess you're clear with this concept of simple problems on working capital. In the next video, we're going to see the problem on working capital where cost sheet is mentioned. Thank you. Happy learning.